Okay, hi friends, good morning. Welcome to this RTP session on CA Final FR. Yeah, currently we are doing FR RTP for November 23 exams. Now I know those you are preparing for November 23 exams, so the exams are very nearer. 15 days are now pending actually. So sir, what should we do? I tell you one thing, don't do anything new right now. I repeat, don't do anything new right now. Whatever you've done, trust your basically efforts. So whatever you've done, just keep on revising that and just ensure that you've done last 3 RTPs. The last 3 RTPs, last 3 suggested answers, the past question papers, that is what you need to go through. So today's session, we have 8 to 10 a.m. Yeah, this 2 hours. 8 to 10 a.m. we are discussing FR RTP November 23. And then 11 to 1 p.m. Yeah, 11 a.m. to 1 p.m. we have a auditing RTP. The auditing RTP also we are covering today itself, 11 o'clock onwards. Then 2 hours, your entire RTP will get covered. And we're not just going to go overview it. We are actually going to read each and every question. So this RTP discussion is not a kind of overview of RTP. It's a detailed discussion afterwards. If you're not doing RTP, then also it's fine. But I'll still recommend whatever questions we mark as important, you should go through that important questions again at your home. Now, let's begin. Chalo. So, we are going for this FR RTP. And just one announcement, new syllabus FR batches have already been started. I repeat, my new syllabus FR batches have already been started. It's available on yashashacademy.com. So, sir, what about Unacademy? My contract with Unacademy is over now. So currently my lectures are not available on Unacademy. Lectures which are there on Unacademy, they are as per the old syllabus. So I'm telling you, if you are writing exams May 24 or onwards, for you, you need a new syllabus lectures which are available on www.yashashacademy.com. Okay. Now, what are the amendments which are there in your FR? There are few amendments in few of the standards. Yeah, the first few Ind AS have been amended. We'll check that. Second, there's amendment basically in your chapter of CSR. In chapter of CSR, there's amendment. And then there are questions which they have given, no other amendments. The few standards are amended and CSR chapter is amended. Coming to first of all, what are the amendment in your standards? So if you check over here, you have this RTP available on ICAI website. If anybody wants this RTP, which I have highlighted the things, I repeat, if anybody wants this RTP where I have highlighted the things, I'll upload it on our Google Drive. I repeat, I have not yet uploaded. I will upload it on our Google Drive where I keep all my material, and the link for material I'll be sharing it in our Telegram group. Okay. So if you see over here, there are certain amendments made. There are certain amendments made to Indian Accounting Standard Rules 2015, and these are made on 31st of March. So when are these amendments made? These are made on 31st March. They come into effect. So they are basically effective from 1st April 23. So which are the standards which are amended? There's amendment basically in your Ind AS 1. Then there's Ind AS 8, Ind AS 12, Ind AS 101. The Ind AS 1, Ind AS 8, Ind AS 12, Ind AS 101, 4 standards are amended, but amendment is very minor. I repeat, amendment is very, very minor amendment. Okay, let's see what are the amendments which are there. First of all, coming to Ind AS 1. You know, Ind AS 1 tells that all your significant accounting policies are to be disclosed. Yes, no? Keep replying. The more you reply, more you'll enjoy the lectures. Okay, the Ind AS 1 says all your significant accounting policies are to be disclosed, but the problem is, what do you mean by the word significant? The significant word is not defined under Ind AS 1. So what did they do? The significant word is not defined under Ind AS 1. They have a word material defined. So instead of writing the word significant accounting policy, they've replaced it with a material accounting policy. So they are replacing the word significant accounting policy with the word material accounting policy. Bas ho gaya. So now they are telling all your material accounting policy needs a disclosure. The word significant accounting policy is replaced with material accounting policy. Okay, coming to the next, Ind AS 8. Now, what's the change under Ind AS 8? Now, see, Ind AS 8 was related to what? Change in accounting policy, change in basically your accounting estimates and errors. The change in accounting policy, change in accounting estimates and errors. Now, the definition of accounting estimate was not given. I repeat, in your Ind AS 8, they had not given the definition of the word accounting estimate. So, sir, what did they do? क्या किया उन्होंने? So now they gave. So the definition of accounting estimate was not given. The accounting estimate ka definition is added. What is the definition of accounting estimate? Accounting estimates are monetary amount. Accounting estimates are monetary amount in financial statement that are subject to measurement uncertainty. Okay, so very simple. Accounting estimates are what? Monetary amount in your financial statement which are subject to measurement uncertainty. Are you clear? Something which has a measurement uncertainty, that are nothing but accounting estimate. And they've given some examples also. Loss allowances for expected credit loss. So trade receivable may we make a provision for bad debt. NRV calculation. NRV is estimated selling price. The fair value of asset or liability we determine, we have to estimate the fair value. Depreciation, so useful life is based on estimate. Provision for warranty, that is an estimate. The estimates are monetary amount in financial statement that are subject to measurement uncertainty. Clear? That's the change under your Ind AS 8. Now going to Ind AS 12, Ind AS 101. Now these two are kind of related. Under your Ind AS 12, under Ind AS 101, what is the amendment? Let's try to understand. Let us try to understand. Now, tell me one thing. As per your Ind AS 16, Ind AS 116, if you recall your Ind AS 116, we book a ROU asset. When we take an asset on lease, entry is ROU asset debit to lease liability. Okay. Now, this is what we have done in books for tax purpose. This is what we have done in books. For income tax purpose, there is no ROU asset, there is no lease liability. For income tax purpose, as and when you pay lease rental, that's a rent expense. I repeat, for income tax purpose, there's no ROU asset, no lease liability. So what is happening? Whatever lease rental you pay, that will be the rent expense. So in our books mein we have an asset, we have a liability. In taxation, there is no asset, no liability. Same way. If you recall your Ind AS 16, PP. If Ind AS 16 is on PP, Ind AS 16 as well as 37, basically provision. So we have a provision for decommissioning liability, decommissioning or site restoration. What is the journal entry done for provision for decommissioning liability? Whatever decommissioning liability going to come at the end, uska present value we create a provision. Entry is PPE account debit to provision for decommissioning liability. Yes, no? Keep replying. PPE debit to provision for decommissioning liability. Now again, this is there in your books. So in your books, you are having a PPE debit to provision for decommissioning liability, but it is not there. It is not there under income tax. Income tax may we don't add to PPE. We do not have a provision for decommissioning liability right now. That will be available as an expense. That will be allowed as deduction whenever we pay in last year. Whenever we are paying in which year? Last year. So as per Ind AS 116, we book a ROU asset to lease liability. Books may we have it, tax may nothing. As per Ind AS 16 or 37, we have a provision for decommissioning liability, PPE to provision. Books mein hai, income tax mein kuch nahi. So now can I say over here, asset increases, liability also increases in books? Okay, asset increase, I have to create a DTL. Asset increases, I have to create a DTL. Liability increases, I have to create a DTA. So can I say on this DTL required, on this DTA required, but we were not booking. Same way, यहाँ पे DTA L required, यहाँ पे DTA required, we were not booking. Now they say you need to book it. So earlier if it equal, it was a equal DTA, equal DTL coming up, we were ignoring it. Equal DTA, equal DTL coming up, we were ignoring it. Yes, no? Now they say you record it. That's the only difference. Are you clear? So on ROU asset, it was a DTA required. On lease liability, DTL required. We are not booking it. Now you book it. The checkout. As per amendment, they have added an exception to the recognition of DTA, DTL on taxable temporary differences on account of initial recognition of transaction which does not give rise to equal taxable. अच्छा, जो equal आ रहा है ना, which does not give rise to equal, वो exception में है. But which gives rise to equal, you have to record that DTA, DTL. Okay, so now what we need to do? Record DTL on ROU asset and DTA on lease liability. Just a minute. Now, record DTL on ROU asset and DTA on lease liability. If you're writing, please make sure you write down together. We have to complete in 2 hours the entire RTP. And same way for the second one, record DTL on PPE. PPE goes up. It is not taxed now. And DTA on provision for decommissioning liability. Earlier this was not recognized. Now this is to be done. Are you clear? This is amendment for your Ind AS 12 and Ind AS 101. Ind AS 12, Ind AS 101. हो गया? Okay, if I just go back, what are the amendments? First of all, in your Ind AS 1, the word significant accounting policy is replaced with the word material accounting policy. The word significant chala gaya, material aa gaya. Second, Ind AS 8, the definition of accounting estimate is added. Accounting estimates are monetary amount and financial statement that are subject to measurement uncertainty. And Ind AS 12 and 101, that is basically the thing. We record a DTL on ROU asset and DTA on lease liability. Same way we'll record a DTL on PPE and DTA on your decommissioning liability. ठीक है. So check out what is the amendment here. The amendment is the first time adopter shall recognize DTA and DTL for all deductible and taxable differences associated with ROU asset, lease liability and your decommissioning, restoration, similar liability that are recognized as a part of cost of related asset. Is it clear? Okay, next CSR amendments. Next CSR amendment. Yes, यहाँ पे there are some amendment. Now they are telling. See, first of all, if you recall, for CSR committee applicability and for CSR spending applicability, there were limits given. If you cross any of the limits, then CSR committee is to be formed. You're required to spend 2% of average net profit on CSR activity. The limits were given. But sir, what if I don't? This year I cross limit, next year I don't cross. Okay, this year I cross limit, so now CSR applicable, now I'm not crossing. But if you recall, once CSR applicable, it was applicable for 3 years. If you recall, once CSR was applicable, it was applicable for 3 years. Now that is omitted. So ye check karo, this one. Rule 3.2 is omitted. Rule 3.2 required that company that ceases to fulfill the criteria for 3 consecutive years. For 3 consecutive years, you are not covered in criteria. Then only you are out from requirement of CSR committee. Now that's gone. Now that is gone. To mean simple words, last year criteria full. This year CSR committee is required. Now suppose this year criteria not met. Next year CSR committee not required. I repeat. Last year criteria met, so this year CSR committee required. This year criteria not met, so next year CSR committee will not be required. The rule 3.2 requiring that once applicable, 3 years applicable, that is removed. Are you clear? Okay, then if you have anything pending in unspent CSR amount, you're required to spend on CSR, you did not spend it. Remember, you're required to spend, you did not spend it, then ongoing project, not an ongoing project, you transfer it to a separate bank account, not an ongoing project, you do transfer it to a fund maintained by government, all that things. If you have something in unspent CSR, then till that point of time, CSR committee will be required, even if you don't fulfill criteria now. The constitution of CSR committee by a company having an amount in unspent CSR account, even though limits are not crossed, even though now limits are not crossed, still you have to have a CSR committee if there is some amount pending in unpaid CSR. Okay, so this two things. Then CSR you can do on your own. Or through some implementing agencies. I can do that corporate social responsibility spending. I can do CSR spending on my own or through some implementing agencies. They've added a list. In the list of implementing agency, they've added something. The inclusion in the list of implementing agencies. So who are included in that implementing agencies? Any fund or institution which is for charitable purpose, any trust wholly for religious purpose or basically charitable purpose, any fund or institution for charitable purpose, any trust wholly for public religious purpose or wholly for public religious and charitable purpose, any university or educational institution which is for educational purpose, not for profit, and any hospitals which are only for philanthropic purpose, not for profit. So I can do CSR on my own or through some implementing agencies. They've given some list of implementing agencies. That's fine. Now next one is important, change in limit towards impact assessment studies. Anywhere you are stuck up, please write it down in the chat box. And I again remind you, the new syllabus FR lectures are available on www.yashashacademy.com. Okay, now impact assessment study. See, you do a CSR. I spent on CSR. Now, whether it's creating an impact or not, I wanted to eradicate poverty. I wanted to eradicate hunger. I spent on it. So what is the impact did you had? So now, check your Rule 8 of CSR Rules 2014. Company having an average CSR obligation 10 crore or more. Okay, big companies. Company having an average CSR obligation 10 crore or more, they have to undertake, they should have mandatory, they have to undertake impact assessment. Now, can I say I spent on CSR, then I need to understand the impact which I have created? Now, impact assessment ke liye I'll give a contract to some agencies. They will try to see what is really the impact of my CSR. I spent on that impact assessment. So earlier, how much money I can spend for that impact assessment? So you can have expenditure not exceeding 5% of your total CSR or 50 lakh, whichever is less. 5% of your total CSR or 50 lakh, whichever is less, that much you were allowed to spend on impact assessment. Now the limit from 5% is made as 2%. It is 2% of 50 lakh, whichever is higher. Pehle tha whichever is lower. Now it's 2% of 50 lakh, whichever is higher. So earlier it was 5% of 50 lakh, whichever is lower. Now it's 2% of 50 lakh, whichever is higher. So how much I can spend on impact assessment? That's added. Okay, this is important. Next. See, in your board report, there was some details regarding CSR to be given. In that, there is some addition done. I repeat, in your BOD report, there was some details required to be given about the CSR. What is added? What is added? This is actually in company's board report. What I need to add in company's board report? The one executive summary. To give an executive summary. And number 2, CSR spending you need to give total amount. The CSR spending you give total amount. Earlier आपको project wise चाहिए था. Earlier it was project wise. Now they say you give a total only चलेगा. Okay, so about CSR spending, you have to give some disclosure in your board report. Few things are added. What is added? One is executive summary required. Second, the spendings are now required on total basis, not each project wise. Not each project wise. And some extra disclosure relating to some unspent amount. Some extra disclosures which are relating to unspent amount. Okay. So these are amendments in the chapter of CSR. So we did few amendments which came in your Ind AS, very minor, and we did few amendments which came in the chapter of CSR. New syllabus chapter of CSR is removed. New syllabus mein, if your exam is May 24 or onwards and you are writing in new syllabus, then the CSR chapter only is removed. Now then there are certain amendments given. Amendments given. These are amendments to Ind AS but which came up in March 22. These are amendment in Ind AS, but this came up in March 22. Can I say last year? Currently it's 23. So these are already covered. These are already covered in RTP of May 23. So when I did RTP May 23, these are already covered. I'm not covering again. I repeat, these amendments are already covered in RTP May 23. I'm not covering again. If anybody wants to go through, please go through the video of RTP May 23. Again, I remind you, you need to do the class material first. Number 2, you need to cover up the last 3 RTPs, last 3 suggested answers. And if time permits, you can go through ICI material. Majority questions of ICI material already covered in our material. Now going to the questions. Come to question number 1. We have 20 questions. We have approximately 1 hour 25 minutes. Sorry, 1 hour 35 minutes. Now, this time's RTP is really good. I repeat, FRRTP this time is really good. Almost all questions are really good. So let's do it. Question number 1. Let's do it. Question number 1. This is on Ind AS 103 business combination. Really good RTP. Please make sure you go through. The sums are a bit different also this time. Okay, mini limited approach max limited for acquisition of 80 megawatt power plant. The mini approach is max and I want to acquire that power plant. Okay. For power plant, we'll have an independent valuation coming up. Independent valuation for determining the power plant. And there are some non-current assets, non-current liabilities acquired. And uska value is 11.1 and 32 million. The non-current asset is 11.1, non-current liability is 32 million. Consideration is 51 million. So I'm taking over your power plant. Power plant ka fair value will get it from independent valuer. Plus some non-current asset, non-current liability coming. I'm paying you 51 million. Agreement done on 1st April. Agreement done on 1st April. Due to unavoidable circumstances, valuation could not be completed by that time. Acha, 1st April I acquired, but 1st April the valuation could not be completed. So what did I do? I would have included a provisional figures on 1st April. Later when the final figure comes up, I'll change the value of assets and liability. Correspondingly, your goodwill capital reserve will change. Do you recall that measurement window 1 year? Yeah, that thing. So due to unavoidable circumstances, the valuation could not be completed, and 6 months after the acquisition date, the valuation could be completed. Okay. Now, the carrying amount. Max Limited records fair value 46.9. Acha, so what did I do? So they have in their book the fair value only yesterday. They have in their book fair value. According to them, it's 46.9. I'll start with 46.9. We are going to appoint an independent valuer. We already appointed also. but independent valuer has not given a value. And if we check here, 6 months after acquisition date, we get a new value 54.9. So initially I recorded at 46.9. Later, within the measurement window, I get a final figure. I'll change this. Opposite corresponding effect will come in goodwill or capital reserve. Fine. Plus, they also have a license to operate the power plant. Okay, license to operate power plant, it's not there in their books. License to operate power plant is not there in their books. They have not recorded, but it's an identifiable intangible asset. We can record in our book. So we will record in our book at a fair value 5 million. So they don't have it in their book. We will record it. So what is coming? One, the power plant coming. Initially we'll record at 46.9. License to operate is coming 5 million. Okay. Other non-current asset coming 11 million. Liability coming 32 million, and net we have paid is 51 million. 51 million what we have paid. Okay, first, whether it's an asset acquisition or a business combination, acquiring an entire power plant, it will meet the definition of the word business. It's a set of integrated activities and asset capable of being conducted and managed. So it is basically fulfilling the definition of word business. It's a business combination. Done. Okay, calculate goodwill or gain on bargain purchase. First, calculate based on that 46.9 million for power plant. First calculate based on 46.9 million for power plant. Later on it will change. So if I just go over here, the acquisition fulfills definition. It's basically your business acquisition. Now the PC is 51. What is coming? The fair value of power plant initially 46.9, other assets are 11.1, license coming 5, liability coming this. The net asset coming 31, we paid 51, goodwill is 20. Net asset coming is 31, we paid 51, goodwill is 30. Prepare the balance sheet. They've asked journal entry, तो journal entry दे दिया. Power plant coming in, other asset coming in, license coming in, liability coming in, we paid this, difference is goodwill. And prepare a balance sheet also. Prepare a balance sheet. This all things coming, journal entry wale that are added. Now, if you just go back to question, the journal entry karo, balance sheet karo, done. Journal entry, balance sheet. Now, whether any adjustment is required subsequent to acquisition. Yes, subsequent to acquisition, do we need any adjustment? Yeah. The final figure of power plant was not available. It came up later. So 46.9 becomes some 54. So we'll change that. Opposite effect will come in goodwill or capital reserve. Check out. So whether subsequent required, the subsequent accounting. So carrying amount of PP is going up by 8 million. 46.9 becomes 54.9. So it becomes 8 million. Opposite goodwill also 8 million. Now one more thing. See, the thing is, you added 8 million. 1st April 1. Now your period is ending in September. We have given depreciation on 46.9. It should have been on 54.9. We have given depreciation on 46.9. It should have been on 54.9. So can I say additional depreciation on 8 million will come up? So for the period ended September, there's an additional depreciation on that 8 million coming up. And sir, what about the deferred tax impact? Question is silent about tax rate. Deferred tax impact is ignored. Are you clear? Question is silent about tax rate. Deferred tax impact is ignored. The question 1 important. Whatever questions I mark as important, please make sure you do it again. Question number 1 is important. Let's go to question number 2. Okay, question number 2 is fairly simple. There is a company, unka presentation currency and functional currency is different. The functional currency is USD, presentation currency is INR. They've given you the balance sheet, or they've given you the trial balance or balance sheet in. The balance sheet is given basically in USD, the functional currency. You have to convert into presentation currency. Okay, how do we convert? Basically the financials which are there in presentation functional currency to presentation currency? all assets liability at closing rate. All assets liability at closing rate. Your expenses income come at average rate. ठीक है, तो all your assets and liability closing rate. If I just go over here, the rates. The exchange rate beginning is 73. Exchange rate beginning is 73. Just a minute. My pen has stopped working. I need to restart my laptop. 1 minute. My pen has stopped working. I'll just restart the laptop. Okay, till that time, tell me, how are your studies going? I'm just restarting my laptop. How are your studies going? Anything which you want to ask to me related to your exams? If laptop is not yet restarted, I'll cover it right now, or else I'll cover at the end. But put up your questions so that I can understand what you really feel about your preparations. And remember, the coverage which we have done in class is always exhaustive, so don't worry about that. But only one thing which I want from you, with our material, refer the last 3 RTPs as well as the suggested answers. Okay, now coming back. Oh yeah, laptop started. Coming back to rates, beginning is 73, end is 75. Beginning is 73, end is 75. And if you just go back, profit translation already given. Profit for 1, 2 translation given. Profit for 2, 3 translation given. Profit translation already given, and there's some dividend paid. And dividend paid, the rate on the date of payment is also given, 73.5. Rate on date of payment is already given to you. And retain earnings. Okay, retain earning 1st April 1. Achha, retain earning 1st April 1 is 4 lakh. Okay, then in 1, 2 you earn profit, conversion is given. Then in 1, 2 you earn profit, conversion is given. You declared dividend, the rate at which going on that day, that is also given. If I go to solution, your balance sheet item, your opening last year balance sheet, all last year ke rate. This year balance sheet, all this year rate. All assets, liabilities at closing rate. Last year balance sheet, last year closing. This year balance sheet, this year closing. All assets and liability. So last year balance sheet, last year rate. This year balance sheet, this year rate. Share capital mein. In your share capital, it continues at historical rate. Check out, they would have given share capital was issued when rate was 70. Share capital was issued when rate was 70. Keep that 70 only, no change. Now coming to retain earnings. Opening retain earning last year given. Last year ka profit conversion also given. Opening retain earning last year given. Last year profit conversion also given. And last year there was no dividend. So this is retain earning last year. This becomes opening this year. This year profit conversion given. This year dividend is also given. This is the closing retain earning. So did you understood opening retain earning, closing retain earning? They're already given to you. So that we put it over here, the retained earnings. Acha. Now, your foreign currency translation reserve. Opening was already given 492, or you can take balancing figure also. So this becomes your balancing figure. The difference, we put it in foreign currency translation reserve. Any doubts? Anybody? So we are done with question 1. We are done with question number 2. Question 2 is fine, fairly, not important. Question number 1 was good one. Question 2, okay, we have a similar question in class. But still, यहाँ पे balance sheet, P&L both are given. It becomes confusing. People feel, sir, why P&L given? So students are feeling, sir, why P&L given? As such, there was no use of P&L. कोई use नहीं है P&L का, because the conversion rate for profits were already given to you. The converted amount were already given. Okay, 2 also mark it as important. Question 1 important, question 2 important. Question 3. Question number 3, we have a similar question in our Ind AS 110. Airtel infrastructure, Airtel telecom. तो checkout A controls B. A controls B. And they're telling 1st April 2002, A acquired a building from B, 600 lakh, and B had bought it for 525 lakh. So 525 lakh ka building, they gave 1 year depreciation, book value 500 building they give me for 600. Acha, so they bought it for 525, they gave 1 year depreciation, now they're carrying amount 500, and they are giving it within the group. Within the group only they are selling it for 600. The similar question is there in our material. Almost similar figures also. I'm not going for question 3. It is very easy. Same is there in our material. Airtel Telecom and Airtel Infrastructure. In your CFS, this profit earned is kind of eliminated, and in your CFS that additional depreciation. You see, 500 wala fixed asset you sold within a group for 600. So can I say group mein 600 depreciation given, depreciation on 600? But for CFS, it should not be on 600. It should be basically the earlier one only. So that extra depreciation ka reversal comes. So question 3 is okay. You can do it on your own. 4th one I'm doing at the end. Question number 4 is on CFS. Consolidated financial statement. We have to prepare a consolidated balance sheet. I'm doing question 4 at the end. Come to 5th one. I'm doing question number 4 at the end. Okay, now coming to question number 5. You open a new factory and you're getting a government grant 15,000 for a machine, capital equipment. Okay, machine ke liye you got a government grant, 2 options, deducted from the carrying amount of machine. So now reduced depreciation charge will be there. Or second option is treated as a deferred income. So very simple. I just have to give journal entry under both the approaches. Required to give journal entries under both method permitted. Just give journal entry. Nothing difficult in this. So question 5 is okay. 6th one important. 1st, 2nd, 4th, 6th till now. 1st, 2nd important, 4th also important. I'll come to 4th one at the end. Okay, come to 6th one. See, this is on Ind AS 8. Change in accounting policy, change in accounting estimates and errors. This question is all of it. Change in accounting policy, change in accounting estimate and errors. This question is all. There's a change in accounting policy also. There's a change in accounting estimate also. There's a prior period error also. Let's see. In financial statement for year ended 31st March 2, Y has reported this following things. In 31st March 2. Okay, in 2002-3. After the financials of 1-2 were approved, financials of 1-2 are already approved. I cannot go and change that. We discovered inventories. The products sold, we had similar thing in class. The products sold were included in inventory 6500. So can I say last year inventory was overvalued? Prior period error. ये आपका error है. This is error. Alright, prior period error. चलो. So prior period. So last year inventory was wrongly valued. Inventory was more. If inventory was more, profit also came more last year. So last year inventory went up, last year profit went up. Profit went up, the tax also went up. And uske baad retain earning also went up. So all that things. So we'll remove from last year's inventory. Last year's profit will go down by 6500. Profit goes down by 6500. And last year uska tax, if you check, tax rate is given 30%. Tax 30%. So 6500 ka 30%, 1950 last year's tax will also go down. So last year 6500 will remove from inventory, profit will go down 6500, 1950 ka tax will go down. The net effect in retained earning 4550. Okay, so let me just take this line by line. First one. Question number 5. 4th one I'm doing at the end. अच्छा 5 हो गया. 6th one, sorry. This is 6th. Okay, question number 6. 1. There's a prior period error. There's a prior period error. If I want to rectify, what do I need to do? If I want to rectify, what do I need to do? So last year I'll remove from inventory. Inventory goes down, cost of sale increases. So increase the cost of sale 6550, decrease profit 4550. Sir, why? Tax will go down by 1950. Tax will go down by 1950 and retain earning is getting decreased by 4550. Retain earning is getting decreased by 4550. I hope this is clear. Okay, so this was the first point. Acha, now what about current year? Last year wrong tha, current year mein kya hai? Let me just go to the question. Have they given data about current year? Yeah. See, in your current year, your sales is 86,500. Cost of sales includes 6500 error in opening inventory. So can I say current year opening inventory went down? So current year opening stock has gone down. Opening stock goes down, profit should go up. So current year reduce cost of sales by 6500. Reduce cost of sales by 6500. So PBT goes up by 6500. Tax will go up by 1950 and your retain earning goes up by 4550. Okay, so let us take the impact. I think they would have given somewhere here. APNL. Okay, let me just go down. नीचे मिलेगा. So in your current year, you have basically that 6500 correction of error, which was basically last year. So last year your profit goes up by 4550. This year your profit goes down by last year your profit went down by 4550. This year opening stock goes down, profit goes up 4550. Okay, that 4550 impact will be coming in your profit both the time. 4550, the profit impact is coming in both the time. Okay. Next, second point over here, if you check in the question, in 2002-03 you change accounting policy for measurement of investment in associate. You have investment in associate, it was at cost model, now you change it to fair value. This is change in accounting policy. Okay, change in accounting policy, you need a retrospective effect. Beginning of previous year say. Beginning of previous year say the effect needs to be given. Okay, this is 2002-03. Beginning of previous year. This is 2002-03. Previous year is 1-2. Beginning of previous year is 1st April 1. Okay, the 1st April 1. In your book, it is at cost. In your book, it's at cost 3,000. 1st April 1, 18,000. In your book 1st April 1, it's 18. So can I say 15,000? I'll increase 1st April 1 में. है ना? If I increase on 1st April 1, 15,000, उसका 30% tax impact. उसका tax impact is 30%. Yeah, so 4500. So net impact in your OCI will be 10,500. Net impact in your OCI will be 10,500. ये रहा देखो. तो basically 1st April 1, 10,500, the effect of change in accounting policy is given. Okay, now that was 1st April 1. उसके बाद 18 became 20. 18 became 20. 2,000 again increasing. So 2,000 again the asset increases, 30% tax impact. Net 1,400 your profit increases. And current year 20 becoming 25. Okay, so first 3 became 18 beginning of previous year. Then 18 became 20. Then 20 became 25. This is how the effect has been given. So we are required to show all of this. And third one, what is the third one over here? As at 31st March 3, why reassess the useful life of machine A from 4 years to 7 years? This is change in accounting estimate. I repeat, whatever questions we mark it as important, you please do it again. It's very, very important for you. ठीक है, तो now there's a change in accounting estimate. Machine was acquired for 6,000. If it was acquired for 6,000, life was 4 years. Can I say every year it was 1,500 depreciation? Acha, we acquired 1st April 2000. We acquired on 1st April 2000. So 2000, 2001, 2000, 2001, 2. Okay, 2000, 2001, and then 1, 2. Currently, this year is going on. This year going on. This year I'll give a new depreciation only. This year I'll give a new depreciation. So earlier it was 1,500, 1,500, 3,000 gone. Remaining 3,000 spread over 5 years. So कैसे आए 5 years? So total life from 4 becomes 7. 4 में से 2 gone. A 3rd year's depreciation pending. I'll give 3rd year's depreciation as per the new thing only. So I just write over here. Depreciation for 2002-3 will be as per revised useful life. Okay, so now remaining 3,000 are to depreciate over 5 years. So now onwards depreciation is 600. So earlier depreciation was 1,500. Now depreciation will be 600. Acha, so 600, 600 and 3 more years 600. So 600, 600, 600, 600, 600. This is how we need to do it. So what we are doing? So in your 2002-3, earlier depreciation was 15. Now we are making it 600. In your 2002-3, depreciation was 1,500. We are making it as 600. The depreciation reduces by 900. Depreciation reduces by 900. Profit will go up by 900. Profit will go up by 900. Are you clear? Okay, check this. For change in accounting estimate, reduce the depreciation by 900 in 2, 3 and 3, 4. 2, 3 and 3, 4 mein 900 depreciation goes down. Earlier it was 1,500, now it will become 600. Acha, then post-tax impact iska aa jayega is 630. Why post-tax impact 630? Because depreciation went down, tax benefit will go away. Depreciation went down, tax benefit goes away. So in your question number 6, you had 3 things. 1, change in accounting policy. 2nd, change in accounting estimate. And 3rd, prior period error. Please make sure you go through question number 6 again. This question comes up, it will be for 12 to 16 marks. Okay, come to question number 7. Till now, question 1, 2, 4 and 6. 4 are important. Okay, question number 7. 7th is also important. Deferred tax. 7th is also important. I told you this time's RTP of FR is really good. Please make sure you go through it. Okay, 1st April 1. Entity paying a 30% tax, you acquired a non-tax deductible office building. If something is a non-tax deductible, so in that case, if you recall your deferred tax wala thing, if an asset is a non-tax deductible, उसपे कोई tax deductible मिलेगा ही नहीं, then in that case we don't record DTA, DTL. The carrying amount, the tax base is equal to carrying amount. The tax base is equal to carrying amount. It's a non-deductible office, and Ind AS 12 prohibits recognition of DTL related with this. It's already given. It's depreciated over 10 years. So 1 year gone, out of 1,10,000 depreciation given. So now it's 90. Now it's 90. But now it's revalued by upward 45. Now it's revalued by upward 45. So 90 becoming 135. On this revaluation, you can book a DTA, DTL. So original 90 पे DTL, original 1 lakh पे DTA, DTL was not there. It was a non-tax deductible thing. But for this 90 becoming 135, you can book a DTA, DTL, correct. To determine the carrying amount, so now carrying amount will become 135. Achha, now 135 to be depreciated over remaining 9 years. So carrying amount is now 135 to be depreciated over remaining 9 years. 15,000 will be depreciated every year. And now the deferred tax impact. Okay, what's the deferred tax impact on it? That's good. So check out. Check out question 7. Okay, so now we have to depreciate basically 15,000 per year. Acha. The temporary difference associated will be for initial recognition pay. There was nothing recorded. वो 90 पे नहीं आएगा. तो 90 becoming 135 only on 45. Only on 45 you are recording a DTL. On 45 you are recording a DTL 13,500, and now onwards what will happen? Earlier depreciation was coming 10. Now depreciation will come 15. Earlier depreciation was coming 10, now onwards depreciation will come 15. So 5,000 का 30%. Additional depreciation 5 का 30%. Did you get 1,500? That much DTL will get reversed every year. So DTL relating to additional depreciation is getting reversed. Yeah, sir. DTL related to additional depreciation is getting reversed. From year 2 to year 10. Because of additional depreciation, now the DTL is getting reversed. So 1,500 every year. The additional depreciation is 5,000. Earlier it was 10, now it became 15. So on 5,000, 30%, 1,500, 1,500, 1,500. So see, DTL was 13,500, then becomes 12, then 10,500, then 9, then 7,500, 6,000, 4,500, 3,000, 1,500. Last mein ho gaya nil. Are you getting it? Good question. Question number was 7. Next, 8th. Next one is 8th one. A company incurred following expenditure during the development phase. Okay, during development phase, if you do expenditure, it can be capitalized subject to 6 criteria. You also purchase software from third party for incorporating in your product. Okay, for incorporating in my software, I have to purchase some ready software also. That can also be capitalized because that is used to incorporate in my software. And you also give services. You also give some services. You also take services of external professional developer. Achha, you don't give, you take. Achha, you take services. If I am taking services of external developer for development purpose, that will also be capitalized. Okay, what all you have spent? What all you have spent? Pay attention. Purchase price of imported software capitalized. Purchase price of imported software capitalized. Achha, employment cost 1,200, but they're telling the development lasted only for 9 months. Development lasted only for 9 months. So I cannot capitalize full 12 months. I can capitalize only 9 months, 900 rupee. So you capitalize 600, you capitalize 900. Testing cost, yes. Now other cost 450. Usme they are telling 450 mein 50 is due to some abnormal loss. 50 was due to some abnormal loss. Abnormal loss cannot be capitalized. So don't capitalize 450, capitalize 400. Professional fees for external developers you can capitalize. Staff training cannot be capitalized. Staff may go away after taking training. Training leke bhag jayenge. So don't capitalize. Advertising, no. Admin, general overhead, no. The last three, this three cannot be capitalized. Employee cost may 900 and in your other cost may 400. This sum is easy, not difficult. I'm not marking important. I am not marking it as important. Question number 9. So, question number 9. As such, we have a similar question in our classwork. We have a bigger one. We have not just the small portion, we have a bigger question in this. You have taken a bank loan. You have taken a bank loan for how many years? 4 years. 5,000 rupees and rate is 8%, which is a normal rate of interest. Interest you have to pay every year. Okay, the 5,000 into 8%, 5,000 into 8%. So can I say I have to pay 400? So 400, 400, 400, and last में I'll pay 5400. अच्छा, 400, 400, 400, and last में I'll pay 5,000 principal, 400 interest. Now, the transaction cost is 100. Transaction cost is 100. You see, you got 5,000, but you paid 100 rupee transaction cost. Effectively, can I say you got 4,900? So you are paying 400 on 4,900. You are paying 400 effectively on what? 4,900. The effective rate of interest is 8.612. It's not 8%, it's more than 8%. Fine. In 2001-2, there were financial difficulties. You approached bank. Okay, March 2, you're going to bank. You took loan on April 1. After 1 year, the first year got over, and then you go to bank. First year over, and then we go to bank. And now revised term में. In revised term, for the next 3 years, 2003-4, 2002-3, 3-4, 4-5, next 3 years, they've reduced interest payment. They've reduced interest payment from 8% to 5%. So now I have to pay not 8%, I have to pay how many percentage? 5. 5. ठीक है, 5% I have to pay. So on your 5,000, 5%, principal was not yet repaid only. Principal was not yet repaid only. So on your 5,000, now you pay 5%. So 250. So now I have to pay 250, 250 and 5250. 250, 250 and 5250. And there's a fee 50 rupees for this. So there's a fee 50 rupees for this. Whether modification will be extinguishment of original liability or not. Oh, baapre. If you recall, modification to existing liability, modification of financial liability. If modification, 10% test. Remember, question is on 10% test. 10% test to be checked. To do one thing, first of all, find out the liability in your books today. Do one thing, find out the liability in your books today. Okay, then what do you do? Okay, as per the revised terms. As per the revised terms, you find out the liability as per the revised terms, including the 50 rupee to be paid, including that payment to be done. Find out the new liability considering original discount rate. Considering original discount rate, find out the new liability, including that 50 rupee also to be paid. And now you already have some liability. You compare with this new liability. If difference is 10% or more, it's extinguishment accounting. If difference is 10% or less, it's a modification accounting. Did you got it? How does that 10% test work? First, you find out your liability in your books today. So first of all, I need to find out what was liability on day 1, then interest accrued, we paid something, and now closing. So what's liability in your books today? Second, you find out the liability as per the revised terms. You find out the liability as per the revised term, include that 50 rupee also to be paid. And you discount by original discount rate, not today's discount rate. You discount by original discount rate. While doing 10% test, we use original discount rate. And then you compare. If the difference between the liability is 10% or more, it's extinguishment accounting. Otherwise, it's a modification accounting. To check the solution. Check the solution. Okay, this is the original amortized cost calculation. There's an original. See, you have to pay original amortized cost ka calculation. So you record 4900. Interest accrues 421. You're paying 400. This is the closing. Achha, the first year end, can I say the balance is 4921? This is in your book. This is in your book. Now modification happened. Now modification happened. You are going to pay 250, 250 and 5250. Modification happened. 250, 250, 5250. This is what you are going to pay. Uska present value nikala. 4537 plus 50 rupee you take it. This is using original discount rate. Ye jo hai na. This is while doing 10% test, we use original discount rate. Doing 10% test, we use original discount rate. Clear? That's fine. And if you see over here, the present value of cash flow under new using the original discount rate is this, including 50 rupee fee, it's 4587. Okay, so liability in books is 4921, new liability is 4587, difference is 6.8%. Difference is 6.8%, it's less than 10%. Whether we'll have extinguishment accounting? No. Question was just whether we will follow extinguishment accounting. Answer is no. The question was that. What to do? That you don't write. Question utna hi tha. So we will follow modification accounting. We'll follow modification accounting, not extinguishment accounting. Then come to question number 10. Okay, question number 10 is on cash flow. Okay, question number 10 is on cash flow statement. It's a very simple one. Only one point is there which I'll tell you. Question number 10 is as such a simple one. Only one point. What is that one point in question number 10? There is a equipment sold. ये जो equipment है ना, equipment. In that there's some equipment is sold. Let me just go down. Original cost of equipment sold 720. Okay, so we have equipment in book. We have accumulated depreciation on equipment. Do one thing, prepare the ledger. The equipment account, accumulated depreciation on equipment, prepare the ledger. Okay, if I just go down, that what rate it is sold, it's not given. The equipment sold at what rate is not given. Equipment sold at what rate is not given. ठीक है, तो that we need to find out. वो एक important point है. I'll do one thing first. Whenever you're selling an equipment, can I say cost of equipment sold gets removed from the asset? When you're selling an equipment, the cost of equipment sold goes away from asset. And accumulated depreciation on equipment sold, that goes away from accumulated depreciation. If I prepare this, the checkout, this is equipment account, this is accumulated equipment, accumulated depreciation. So opening is available, closing is available, cost of equipment sold is available. This is balancing is purchase. The cost of equipment sold goes away from asset. Now I don't have accumulated depreciation on equipment sold, but I have opening, I have closing, and from your P&L you have the current year's depreciation. From your P&L current year. So this is accumulated depreciation on equipment sold. So this is your cost of equipment sold. Right? And this is accumulated depreciation on equipment sold. Okay, so I have a cost, I have accumulated depreciation. The cost of equipment sold is 720. Accumulated depreciation is 480. So when I say I get the carrying amount cost, 720 minus 480, 240. The 240 is the carrying amount of equipment sold. Now just go back to question. In your question you have in P&L profit on sale is 120. You go to question, you will find profit on sale is 120. The book value is 240. We sold at a profit of 120. Can I say equipment is sold at 360? Can I say equipment is sold at 360? But that's the only point over here. The checkout era. So original cost is 720, accumulated depreciation 480, net cost is 240. Sold at a profit of 120, it sold at 360. Otherwise, this question is simple. Do it on your own, only this point. I won't say important. Because it's not a great adjustment. Okay adjustment. Moving ahead, question number 11. Okay, moving ahead, question 11, market is important. There's a small point. Which is a good one. Keep smiling, pay attention, and keep replying, man. The more you reply, more you feel good in class. Okay, question 11. The board has approved a plan to sell the division on 30th September. 30th September, board has approved a plan to sell off the division. The sale is expected to be completed after 1 year, but it still qualifies as held for sale. The sale is expected to be completed when? After 1 year. But question says it qualifies as held for sale, so take it. Don't say that, sir, to qualify as held for sale, sale should be completed within 1 year. I know that. But question says do it. Cost to sell 10 CR. Cost to sell 10 CR, which will come up in March 3. कब आएगा cost to sell? March 3. Acha, this is September 1. So can I say cost to sell will come after 1.5 year? Can I say cost to sell will come after 1.5 year? If something is going to come after 1.5 year, today I have to take the present value. उसका present value लेना पड़ेगा. The fair value is 400 both the time. September में, March 2. Fair value is 400, September as well as March 2. Carrying amount is 500. Carrying amount is 500. How will you measure it on September and March? See, carrying amount 500 hai. Fair value less cost to sell is less than that. I'll measure it at fair value less cost to sell. Remember, non-current asset held for sale are measured at carrying amount or fair value less cost to sell, whichever is lower. Only thing is, for fair value less cost to sell, they have given this, the present value factors. Acha, so if it is after 1 year, it's 0.909. If it's after 1.5 year, it's 0.867. If it's after 1 year, it's 0.909. If after 1.5 year, it's 0.867. So check. So your non-current asset held for sale are basically to be valued at carrying amount or fair value less cost to sell. In current case, your fair value less cost to sell is lower. We'll measure it at fair value less cost to sell. Ye. Acha, fair value is 400. Present value of cost to sell. Cost to sell 10 crore, but it will come after 1.5 year. Yeah, this is after 1.5 year. This is for 1.5 year. Okay, that's the only thing. Present value was to be taken, so you value it at 391. Okay, then 6 months gone. 6 months are gone. So can I say now I should use the present value not of 1.5 year. Now it should be 1 year. So now that cost to sell is going to come after 1 year. Now that cost to sell is going to come after 1 year. So now we are taking the present value which is after 1 year. Any doubts? Anybody with this? So while valuing in September 1, the cost to sell is going to come in March 3. It's after 1.5 year. But while valuing in March 1, it's going to come in next year. This is March 1, or March 2 mein aane wala hai. So this is going to come after, not, this is the typing mistake. Wait, there's a typing mistake. This is not March 1, this is March 2. That's going to come in March 3. That's going to come in March 3. So after 1 year, that's why the PBIF of 1 year is used. So September 1 ka measurement, March 2's measurement. Moving ahead, this was your question number 11. Going to question 12. Okay, question 12 as such is simple. Question 12 as such is simple, but the thing is, they've asked you journal entries for it. बड़ा सा क्वेश्चन है, give journal entry to record the cost of inventory. मिला? Give journal entry to record the cost of inventory. तो mark 12th one also is important. थोड़ा अलग हो गया. Okay. Now expenditure on purchase of raw material. What all expenditure you incurred on purchase? Raw material purchase, import duty, other non-refundable taxes that you include. Refundable taxes don't include. Freight to bring it to your godown include. Freight to bring it to your, basically from supplier's place to our place include. Unloading include. Packing, this is a primary packing include. So from supplier's place I have to bring to my place, pack करके अच्छी तरह लाना पड़ेगा. That all is to be included. Only thing is refundable tax is not included. So this is cost of material which you have spent. This cost of material which you have spent. Entry. Inventory debit to bank. तो इन्वेंट्री में आएगा. तो चेक आउट एंट्री. इट इज इन्वेंट्री डेबिट टू बैंक कॉस्ट ऑफ मटेरियल परचेस. Inventory debit to bank cost of material purchase. I give the total of everything. Inventory to bank. Next. Now, there's one more thing. You got 530 rupees rebate from supplier. So rebate from supplier will be deducted from your purchase cost. So purchase cost में से वो deduct हो गया है. And the amount which we have recorded inventory to bank is the net one. Now, additional cost which are in production run. There's some additional cost in production run. Okay, salary of machine workers. Yeah, that is included. Machine worker है ना. Salary of factory supervisor included. Included. Depreciation of factory building included. Consumables included. Depreciation on vehicle used for transporting goods from storeroom to the machine. Storeroom से machine तक लाने के लिए. Still goods are not ready. We are making it. So that is also included. Factory electricity include, factory rental include, depreciation of vehicle used by factory supervisor include. ये सारे include. But problem is journal entry will be not inventory to bank for everything. Journal entry will not be inventory to bank for everything. This is यहाँ पे you are paying salary in cash. This is to bank. Salary of factory supervisor is to bank. अच्छा, फैक्ट्री बिल्डिंग का डेप्रिशिएशन. दिस इज नॉट इन्वेंट्री टू बैंक. दिस इज इन्वेंट्री टू accumulated depreciation. This inventory to accumulated depreciation. See, normally entry is depreciation to accumulated depreciation. Normally entry is depreciation to accumulated depreciation, but this machine is used for manufacturing of inventory. उसका तो वो inventory की cost में add होता है. So that is inventory to accumulated depreciation. Consumable. Can I say consumable is already there in your inventory? Consumables. मेरे पास stock में ही पड़ा है. So from consumables, it goes to another inventory. So it's inventory to inventory. This inventory to inventory. Consumable inventory goes down. WIP inventory goes up. Consumable inventory goes down. WIP का inventory goes up. This again depreciation on vehicles. I'll not write to bank. This is to accumulated depreciation. Factory electricity, yes, I have to pay in cash. So this is to bank. Factory rental, I have to pay in cash to bank. Depreciation, this is to accumulated depreciation. Are you getting it? Debit क्या होगा? Debit is inventory. Inventory debit. 2. If I pay in cash, bank. If some other machine was used, so entry will be inventory to accumulated depreciation. Now, normally it's depreciation to accumulate depreciation. Depreciation goes in P&L, but depreciation related to machine used for production, add it in the cost of inventory. Then you incurred some following admin expense. Depreciation, salary, and they've clearly given. Out of admin expense, 20% is for administering factory. As it is 20% for factory, include 20% in inventory. To include what? 20% in inventory. ठीक है, because 20% relates to factory. The 20% I'll include, but this is depreciation, the two accumulated depreciation. This is also depreciation, the two accumulated depreciation. And this one I can write is to bank. This one I can write in to bank. And then there's some selling expense. Selling expense don't include in inventory. Selling expense is advertisement or salary used for sales staff. That's not included in inventory. Are you clear? Some assets simple, but question it asks journal entries. So check. First, for raw material purchase, it was inventory to bank. Second, for all your cost of conversion. For all your cost of conversion, inventory to bank, inventory to accumulated depreciation factory equipment, accumulated depreciation delivery vehicle, to bank electricity, accumulated depreciation factory supervisor's vehicle. So that is how entry is done. I hope you are clear. I hope you are clear. Okay, question number 13. Question 13, Ind AS 40, investment property, Ind AS 16 is PP. You have assets not used for operational activity. You have assets not used for operational activity. Just a minute. 1 minute. Okay, what are they telling? Details are given to us. A Limited's office. You have some A Limited ka office, 15 storied, 3 you have occupied. Remaining are given on rent. Remaining given on rent will be investment property. Okay, flats in a township. You have flats in township 2000. Out of 2000, 80% are allotted to employee. 80% allotted to employee is PP. Remaining vacant, and you either keep vacant or you give it on rent. You either keep vacant or you give it on rent. There's no intention of selling or allotting to employee. You're not going to allot to employee. Either you'll give on rent or you will keep it vacant only. This, if I give it on rent, it's investment property. If I keep it vacant for capital appreciation, that's also investment property. They've clearly given we are not going to allot, no intention to sell, allot to employees. Okay, flats in another township. 400 given to employee PP. जो employee को दिया PP, 350 given on rent, investment property. Another 250 vacant. I need to understand. Vacant. If future you will allot to employee, then keep it PP. If future you will rent it or sell it, then investment property. So यहाँ पे they are not telling. What will you do with the remaining 250. Future, I'm allotting to employee, I'm keeping for that, then in that case it will be a PP. But future you're going to sell it or basically give it on rentals, investment property. Then you have a hostel. Hostel you are having, it's let out. Let out hai, it's an investment property. Hostel you have let out, it's an investment property. Okay, then you have a land. Then you have land in outskirts. You're not decided what to do. Land held for undetermined use, treated as for capital appreciation. It's treated as for capital appreciation. It's investment property. Okay, land in location 1. Portion is leased out. It is leased out for 25 years. Oh, lease pe hai, so this is basically investment property. Land in location 2, it's leased out for petrol pump 40 years. Oh, given on rent for 40 years, that's also investment property. Any doubts? Anybody? Any doubts? Question number 13. Okay, 13th is okay, not important. Okay, 15th one. There's a 50-50 joint operation. They have formed a legal entity. They have formed a separate legal entity, but both have 50% ownership and take 50% output. It will be treated as JO because both take 50% output. So can I say this new entity is only for the outputs to be given to the operator? It will be JO, joint operation. Okay, as it's a JO, now what they're telling, upon formation, I give my property, we contribute a property fair value 110, intangible with a fair value 10, and B gives equipment with a fair value 120. Okay, so we both are giving. The operators are giving asset to JO. Now can I say JO may 50% is me only? In JO 50% is me only, 50% asset comes back. Remember, if it's a joint operation, I record my share of assets liabilities in my SFS. If it is a JO, I'll record my share of assets and liabilities in my SFS. As I'm recording my share, the 50% assets are going to come back. So you record profit only related to other 50%. Okay, I have given assets fair value total 120 and the carrying amount is 100. So can I say total profit is 20? I've given an asset at 120, the carrying amount 100. Don't record 20 profit, record half. Only related to other person. So I'll be recording a profit of 10. The other guy, 120, is giving asset, carrying amount 80. He has a profit 40. He'll not record 40 because 50% will come back to him. So he'll record only 20. हो गया? So record only your share of profit. Recognize gain loss relating to such transaction only related to other parties' interest in JO. So you record only 10, that guy will record 20. Clear che? You record 10, that guy is recording 20. Next. Question number 15. We have question number 4 pending, which is a very good one. Okay, question 20. You purchase 80% of Kalpan. The fair value of net asset is 200 million. You bought it at 190. You bought 80%. Achha, their net assets are 200. And they value NCI at proportionate net asset. The value NCI at proportionate net asset. Okay, when did you bought it? 2001. Now kya chal raha hai? 2004. Now you carry out a impairment review. And there are 3 individual CGUs are given to you. There are 3 individual CGUs given. And it's not possible to allocate goodwill. So can goodwill be allocated? No. If goodwill cannot be allocated, it will be tested for impairment as a part of group CGU. If goodwill cannot be allocated, it will be tested for impairment as a part of group CGU. ठीक है? Okay, the first let me test impairment of individual CGU. Goodwill नहीं होगा. The individual CGU, the total carrying amount is there, value in use is there. Individual CGU, carrying amount, value in use. ये 180 value in use is more, there is no impairment. ये 100, ये 104, no impairment. यहाँ पे carrying amount 90, 66. So there's an impairment loss coming 24. There's impairment loss coming 24. Now check. The intangibles ka market value we don't know. All current assets have a market value at least equal to carrying amount. All current asset has a market value equal at least to the carrying amount. तो इतना तो minimum उसका market है ही है. तो current assets will not bear any loss. The 24 loss is borne by PP and intangible. 24 loss is borne by PP and intangible. So let me just go down, check over here. ये 24 का loss borne by intangible and PP in proportion to their carrying amount. Now coming to group CGU. Now in your group, who all are there? In your group, you have goodwill, you have unit A, unit B, unit C. Unit A, B, C, we already found it. Unit A, B, C, we have it. Now goodwill. Okay, now what was goodwill on day 1? What was goodwill on day 1? कैसे है goodwill on day 1? See, you paid 190. You paid 190. Okay, what was NCI on day 1? 20% of 200, 40. 20% of 200. Oh, they are based on proportionate net asset. So consideration by acquirer is 190, NCI is 40 minus your identifiable net assets are 200. So goodwill is coming 30 on day 1. Did you found goodwill came 30 on day 1? But we follow proportionate goodwill method. If you just recall, we have to gross up the goodwill. When full goodwill method is followed, no grossing required. When partial goodwill method is followed, grossing up of goodwill is required. Okay, the goodwill was 30, but this was a partial goodwill. If I gross it up, it becomes 37.5. So this is grossed up. 80% is 30, so 100% will be how much? So gross up kar diya goodwill. Now your basically this is 373. This is 373. This is 350. So loss is 23.5. Full it will be borne by goodwill only. 23.5 is the loss of goodwill if full goodwill was recorded. 23.5 will be the loss of goodwill if full goodwill was recorded. We have recorded 80% goodwill. We'll record 80% impairment loss. If full goodwill was recorded, there will be 23.5 ka loss. But we have recorded 80% goodwill. We'll record impairment loss of goodwill also 80%. Any doubts? To actually recognize 18.8, 80% of 23.5. actually recognize 18.8, 23.5 का 80%. The question was related to grossing up. Good one, mark it as important. So this one is important, 15th. Okay, now come to 16th. Okay, 16th is fine, no major thing. Only thing is, this is question related to your employee benefit. In your employee benefit, if you remember, we have a defined obligation. Yeah, so we have basically a obligation, and second we have a plan asset. So do one thing, you have a defined obligation, your plan asset, usme missing figure, actuarial gain loss. The actuary changes assumption, the actuarial gain loss is not given. From that defined benefit obligation, you get the actuarial gain loss, and return on plan asset other than interest. Return on plan asset other than interest, you will get it from that plan asset. So prepare both of that. Remember, we have opening. Okay. Now, if I go to that defined benefit obligation opening is there. Current service cost is added. Current service cost. Past service cost are added. If any payments are done, they are deducted. If any payments done, they are deducted. Interest will be added. Closing is given to you. Balancing is actuarial gain loss. So we have done such type of questions in class, many. 2-3 questions are there similar to it. So this is okay. You can do it on your own. Question 16. It's okay. You can do it on your own. Question number 16. Question 17 is on revenue from contract with customer. That's also easy. Okay. Check question 17. Revenue from contract with customer. You entered into a contract to sell mobile chargers at rupee 100. Achha, but if they purchase more than 1000, you will charge 90 only retrospectively. Achha, so basically I'm selling you at 100 rupee, but if you purchase overall in a year more than 1000, so retrospectively the price will become 90. Okay, so sir, should I record day one? Day one they have not bought 1000. They have not bought 1000. So should I record on day one revenue at 100 or revenue at 90? Depends on your expectation. Till September they only bought 95. We have sold 95 charger, and we expect it will not exceed 1000. If I expect it will not exceed 1000, for this 95 I would have recorded sales at 100. Now in October, the customer acquires a new entity. And now their orders have become bigger. And now we are selling extra 600. We sold extra 600. And now we feel the limit will cross. Okay, So can I say that now I have to have 90 rupee for everything? Cumulative catch-up. Yeah, cumulative catch-up. The first, this 600 I'll record at 90 only, because now I expect they will fulfill. And the earlier, the 600 will be at 90, 5400. The earlier 95 I had recorded at 100, I have to bring it to 90. So 95 may 10 rupee reduce. So minus 950 reduce kar do. So 95 I had recorded 100, that also I have to bring to 90. So 950. So out of 54,000 this time sale. Due to cumulative catch-up, 950 is to be reduced. Currently record a revenue 53050. Check the solution. So current 600, I'll do it at 90. Okay, earlier 95 which I have sold, I recorded at 100, but they should be brought to 90. So usme 10 rupee. The net is coming 53050. Shall I move ahead? Okay, question number 18. Okay, you have a farmland. It's in days 41. This is important. Chalo. A new type of question, not there in material. I told you with our material, last 3 RTPs, last 3 suggested answers are to be done. Don't skip that. Okay, you have a farmland with 2 lakh coconut trees. Coconut palms are coconut trees. And how do you derive the fair value of each coconut tree? Okay, 30 per fruit. So one coconut, if it is giving 30. and it gives 80 fruits per year. So they give 80 nuts per year, into 30 will be the valuation per year. How many years? How many years it will last? So they say it can give 80 years tak revenue. It can give 80 years. But management thinks there are risk involved. Floods come, this come, that come, cyclone, hurricane, whatever. So we take only 5 times the annual revenue. Okay, so it can be sold at 30 rupees. It can be sold at 30 rupees. It will give 80 nuts in a year. I'll take valuation into 5 years. I'll take valuation into 5 years. So when I say it comes 12,000 per tree. So considering the risk involved, management says we should take only for 5 years. Okay, the 12,000 per tree into 2 lakh. Oh, 12,000 into 2 lakh. Calculator में बहुत लंबा हो गया. It's 240 crores. The valuation becomes 240 crores. The 2 lakh coconut trees, if you have planted, the valuation is 240 crores. Okay, now during August 5, some hotel ka chairman comes to you and they say that whenever people come in our hotel, in a welcome drink, we want to give the coconuts. The hotel ka chairman comes, he says that if someone is coming to a hotel in a welcome drink, when they enter the hotel, I want to give them coconuts. So can I say they entered into an arrangement with us? So now we have to reserve 15,000 coconut palms for them. But for them, the rate is 15 per unit. Okay, for them, the rate is 15. So can I have the fair value of all 2 lakh tree based on 15? Can I have the fair value of all 2 lakh tree based on 15? No. Yeah, your contract is for this 15,000 trees. For 15,000 trees, value it as per 15. But for remaining 1,85,000, can I say you'll sell it in open market? Open market, you're going to get 30. Open market, you're going to get 30. So how do I value now? Okay, for this 15,000 trees, they will give 80 nuts. They are valued at 15. They'll give 80 nuts valued at 15, 5 years into 15,000. So this is coming approximately 9 crores. Yeah, 9 crore aa gaya. And 1,85,000 tree, they will give 80 nuts every year. They are valued at 30 for a period of 5 years. This is coming 222 crore. So 222 crore plus 9 crore, total valuation 231 crore. 222 plus 9, 231. So only for 15,000 tree, I have a contract price. You can't take that contract price for remaining 185. Okay, the check solution. Okay, contract price are not necessarily relevant in fair value, and contract is only 7.5% out of 2,15,000. So what happens? Contract price cannot be considered for fair valuation of entire inventory. I cannot value entire inventory based on 15. So 15,000 you have a contract value based on 15. Remaining 185 based on 30. Check. I write down over here. So value 15,000 coconut palms based on contract price, that is 15. Okay, value remaining 1,85,000 coconut palms based on fair value, that is 30 per nut. Are you clear? Okay, next question. This is over 18th, 19th one. Okay, 19th question. We have a similar question in class. This is related to your restructuring. Yeah, this is related to restructuring. Ind AS basically 19. Restructuring is basically related to it, or you can also call it as Ind AS 37 as well. When you're Ind AS 37, we had that provision for restructuring. So this is related to that. Now see, we plan to shut down one of the division. So should I do a provision for that restructuring? So that's basically the thing. So redundancy cost initially estimated at 2 million. But latest estimate before books are approved. It became 1.9. So I'll have a provision 1.9. Acha, some employee I'll retrain, use somewhere else. That cannot be included in provision. Retraining cannot be included in provision. Usko mat lo. ठीक है, plant and equipment which is there in that department, carrying amount is 8 million but recoverable is only 1.5, so 6.5 million will be the impairment loss of plant. 6.5 million is impairment loss of plant. You have some contract with customer. As you are shutting down the plant, you are shutting down the division, contract needs to be cancelled. You have a contract with customers. As you are shutting down the plant, contract needs to be cancelled, so I have to pay them. We have to pay actually 6 lakh, but compensation actually paid. Before books are approved, we understood it's 550. Before books are approved, it's 550. So I'll have a provision 550. Okay, operating losses 3 lakh per month. In the first 3 months of 2023 and then future may it will come. Operating losses going to coming in future. It's not to be included in. It is not to be included in your provision for restructuring. Acha, you are running that division in a leasehold premises. On a leasehold premises, the rentals are there. Now you cannot cancel the contract. It's an onerous contract. I'll have to pay a lease rental 1.5 million annually. For 5 years. But I'll sublease it. Sublease में कुछ मिलेगा तो this is what I have to pay. Sublease में what I'll receive. The remaining shortfall, you have to make a provision for that onerous contract. Are you getting it? This is similar to what we have done in class. Only the sublease wala point is different. Mark it as important. Only the sublease point is different. Mark it as important. Question number is 19. Okay, now going to question number 20. Oh, very simple. You're taken on lease a solar farm. And the tax benefit related to installation. Of solar farm goes to the owner. It's okay. Tax benefit related to use should come to me. So still whether it will be in leases, answer is yes, it will be leases. Substantially all benefit related to use is coming to you only. We had the same question, same ditto question is there in our class. Okay, come to question number 4. Which is on consolidated financial statement. Everything else is done. Whatever important questions are there, I already marked you. So that you need to do it at home again. Now going to question number 4. Okay, pay attention. Ishwar Limited holds investment in Vinayak Limited. See, you're holding investment. So can I say already appearing in balance sheet? Holds. So इसका meaning it's already there in balance sheet. ठीक है. And there's the draft balance sheet given. This is the draft balance sheet, March 2004. Draft balance sheet 2004. We have a PP, we have some investments in Ishwar. Acha, in this you have an investment in Vinayak. There can be some other investment also. There can be investment in Vinayak and some other investment due to CFS. Due to CFS, your investment in Vinayak goes away. And assets and liabilities of Vinayak comes in due to CFS. अगर CFS बनाओगे तो investment in Vinayak goes away, assets and liabilities comes in. Fine. Inventory is there, trade receivable is there, cash and cash equivalent, and other things are given. So under your equity, we have share capital, retain earning, other component of equity. We have share capital, retain earning, other components of equity. Under your non-current liability, you have some provision, long-term borrowing, and deferred tax. Current liability, acha, issuers investment in Vinayak. Issuers investment in Vinayak. 1st April 1. Acha, this balance sheets were of 2004. Yeah, 1st April 1. You acquired 400 million shares of Vinayak by exchanging one share of yours against two. Okay, you bought 400 million shares. Okay, 400 million is how many percentage? 400 million is how many percentage? They have this 5 lakh, it's 500 million. They have this 5 lakh, this is 500, thousands mein na? It's 500 million. So 500 million the, you bought 400, can I say 80 percentage? Okay, you had bought 80 percentage. And for every 4 shares, sorry, every 2 shares, you're giving 1 share of yours, and your share is worth 7 rupees. So can I say I'll give 200 million shares for 400 million? For every 2, I'm giving 1. I'll give 700 million share. 700 million share, 1 share is at 7 rupee. So PC is 1400. So your PC is equal to 1400 million. Okay. There was a due diligence before acquiring. Before acquiring, you had some due diligence fee done. Due diligence fee was 15 million. You included in your investment. No. Due diligence fee is basically your acquisition related cost. It's acquisition related cost. It should have gone in P&L. You have capitalized. You have capitalized. So remove it. So from your investment, 15 goes away. 15 rupees goes away. It should have gone to P&L. Usko P&L में ले जाएंगे. तो retain earnings में it will get deducted. And second, PC 1400 goes away when I prepare a CFS. When I prepare CFS, PC 1400 goes away. उसके बदले assets and liabilities. So investment in Vinayak goes away 1400. Assets and liabilities comes in. Fine. Now on 1st April when I acquired, they had a retain earning 750. Other component of equity 25. They had a retain earning 750. Other component of equity is 75. Now fair value exercise was done. Okay, carrying amount. So carrying amount, land 350, building 450. Measured as land became 400, building became 600. Okay, the 350 land becomes 400, increase 50 rupees. 450 ka building becomes 600, and building ka useful life is 30 years. So there will be extra depreciation coming, additional depreciation. ठीक है. Plant and equipment 600 is now estimated at 700, and uska useful life is 4 years. Okay, there was a contingent liability in Vinayak's book. Vinayak did not record. There was a contingent liability in Vinayak's book. They did not record, but if we are able to measure it reliably, we will record. The fair value of contingent liability is 30 million. So we recorded 30 million. Later liability did not came. And they are not reflected in individual financial. Deferred tax is 20%. Now what I'll do, I'll just prepare working note 1 in a manner what we do in class. I'm preparing working note number 1, analysis of reserves and surplus. This is analysis of reserves and surplus into pre and post of Vinayak Limited. Okay, particulars pre-post. Okay, there are two things. One is retain earning. What was there on DOA? When we acquired, it was 750 million. Okay, after DOA, what is there today? Today you'd see 1050. It is 1050 minus 750, it becomes 300. Okay, then other items are there, other components of equity. Other components of equity on DOA, 25 million. Today it is 50 million. After DOA, question is given, it's 50 million. Post is 25. Are you clear? Now we give the effect of revaluation. Upward increase in land on DOA. How much is upward increase in land? 350 becoming 400, and land is non-depreciable. Then upward increase in building. Upward increase in building, it is 450 becoming 600, 150. Now additional depreciation on above. Additional depreciation on building, can I say it increased by 150? Okay, this was 2001. 3 years are gone. 3 years are gone. So 150 I have to depreciate over 30 years. 150 divided by 30 years. But for 3 years I need to take यहाँ पे. 150 divided by 3. Annual additional depreciation 5 into 3 years becomes 15. Are you clear? Additional depreciation, profit will go down. Next, plant and equipment 600, fair value to 700. So increase in plant and equipment 100 rupees. उसके ऊपर भी additional depreciation. Additional depreciation on plant and equipment 100 rupee. What is the remaining useful life? Remaining useful life is 4 years. 4 divided by 4 years, but then I have to do for 3 years. So this becomes 75. This becomes 75. And then there is one more thing. Contingent liability. So provision for contingent liability. It was not there in books. We are recording. Kitna hai fair value of contingent liability? 30 million. 30 million. And provision for contingent liability no longer required. Later that liability did not came. No longer required. So can I say in post it is then removed? Liability removed, it's a profit. Liability removed, it's a profit. First I book a liability, net asset goes down, no longer required, liability removed in post, and they are not there in SFS. They are not there in SFS. Acha, now deferred tax impact. Deferred tax impact. Okay, to check out all revaluation. Deferred tax impact. Can I say ye this all? Itna tha deferred tax impact. Okay, 50 plus 150 plus 100 minus 30. 270, 270 के ऊपर how many percentage deferred tax given? 20%. 20%. 54. 54 DTL will come. It is 270 into 20%. And this is itne pe deferred tax. So it becomes 90, 60, negative 60. Negative 60 into 20%. DTA will come in 12. DTA will come in 12. Are you clear? DTA will come in 12. Let's have the totals over here now. And that total you can then bifurcate between whatever total comes, you can bifurcate between I limited 80%, NCI 20%. I hope this is clear. Now, working note 2, you have NCI. How do I find out NCI? I need on DOA. I need on DOA. Okay, so proportionate equity share capital plus share in pre-acquisition reserves and surplus. So can I say this is NCI on DOA plus share in post acquisition reserves and surplus? You get NCI on DOC. So this all figures you'll be getting it. After that, you'll find out goodwill. This is goodwill on, actually, you'll find goodwill on DOA first. How do I find goodwill? Consideration by acquirer. Consideration by acquirer plus NCI on DOA minus fair value of net assets. We get goodwill on DOA. Question mein there is a impairment. This I'll be coming to it. Question mein there's a impairment. This I'll be coming to it. And then working note 4 is fine. Now how do I find impairment? Check out, this is done. Now coming to this impairment review. 31st March 4. Issuer carried out a further review, concluded that the recoverable amount of net asset of Vinayak today is 2000 million. Recoverable amount of net asset of Vinayak today is 2000. How do I find carrying amount of Vinayak? So now see, impairment of goodwill. What is carrying amount of net asset of Vinayak in CFS? How do I find this? So this is equity share capital plus pre-reserves and surplus plus post reserves and surplus. Total, not our share. Are you getting it? The carrying amount of net asset of Vinayak, which is there in CFS. See, impairment of goodwill is in CFS. Why I'm taking in CFS? Impairment of goodwill is only for CFS. There's no goodwill in SFS. Impairment of goodwill is only for CFS. What is the carrying amount of net asset of Vinayak included in CFS? So, unka equity share, I'm just taking the net assets. What is the net assets today? That is nothing but net assets today. How do I find the net assets? The net asset is equity share capital plus reserves and surplus. So that's what I'm doing. So equity plus pre-reserve plus post-reserve. Isko compare karo with the recoverable amount. You get impairment of goodwill. Are you getting it? This was the important point. Let me just come over here to impairment of goodwill. Acha, one more thing. When I'm calculating impairment plus यहाँ पे grossed up value of goodwill, ये एक ले लो, plus grossed up value of goodwill minus the recoverable amount. अच्छा, why sir grossed up value? As it is partial goodwill method, NCI is at proportionate net asset. NCI is at proportionate net asset. तो आपको ये मिला impairment of goodwill. Impairment of goodwill. And then there's one more thing. Impairment to be recognized will not be this. This is impairment of goodwill if whole goodwill was recognized. This is impairment of goodwill if whole goodwill was recognized. The impairment of goodwill to be recognized is 80% of above. As only 80% goodwill is recorded in books, as only our share of goodwill is recorded in books, comma, only our share of impairment loss of goodwill will be recognized. Only our share of impairment loss of goodwill is recognized. So see, impairment of goodwill was not given, we had to find. Impairment of goodwill was not given, we have to find. So sir, how do I find? I compare the carrying amount with recoverable amount. What is the carrying amount of that subsidiary in CFS today? All fair valuation, goodwill related to that subsidiary are treated as part of carrying amount of that subsidiary. All revaluations, all goodwill related to that subsidiary are treated as part of carrying amount of that subsidiary. How do I find the net asset of that subsidiary today? How do I find net asset of the subsidiary today? Unka capital today, unka pre plus post reserves. वो सारा ले लो. Plus goodwill was not there, the goodwill also you take it. But take grossed up value of goodwill because goodwill appearing is only related to our share. Grossed up value of goodwill. And then you compare with the recoverable amount, you get the impairment loss of goodwill. Acha, impairment loss coming is this, you don't have to record this. Sir, why? Impairment loss coming. This is impairment loss of goodwill if full goodwill was recorded in books. In our books, only 80% goodwill was recorded, so only 80% of that impairment loss is to be recognized. Are you clear? I have written working note 1 for you. If anybody has not written, they can just take a snapshot of it. If you just, इसका आप snapshot ले लो, बाद में आप देख लेना. Working note 1. Going down, working note 2, going down, working note 3, and then there is this impairment of goodwill. Okay, now there's one more point in this question. There's one more point in this question. It's a very good question, not easy, actually I'll say difficult. It's not easy, I'll say actually a difficult question which was asked. Okay, the impairment done. Now, Ishwar. Check out your provision. This is not related to Vinayak. This is not related to the Vinayak, it's related to the parent. There is a provision. Ishwar completed, parent. Parent completed a construction of some non-current asset. Parent completed a construction of non-current asset and you have a legal obligation to restore. If you have a legal obligation to restore, do you create a provision for restoration? Yeah. The provision for restoration required. Entry. PP to provision for restoration. And this will be on 1st April 3. So on 1st April 3. It's 1st April 3 or 13? 1st April 3. So this is now provision for restoration. This is related to parent, not subsidiary. So it doesn't affect above. Okay, 1st April 03, you have to do PP debit to provision for restoration. PP debit to provision for restoration. Now 31st March 4 इसके ऊपर interest accrues. So interest debit to provision for restoration. And PP added, can I say uska depreciation also comes? PP में बढ़ गया तो it's depreciation to PP. This is what you should have done. First, PP to provision for restoration. Provision for restoration, this is at present value of payment to be done at end. Whatever is the present value to be done at the present value. Now, unwinding of discount takes place, interest to provision for restoration. And this is basically the additional depreciation coming up due to that provision for restoration added in PP. Okay, this is what should be done, what has been done. Check. The directors of Ishwar has made a provision. Okay, you will have to spend 125 after 30 years. You have to spend 125 after 20 years. Just divide by 20 karo. You have done a provision 6.25. You have done a provision 6.25. This is wrong. The provision 6.25 is to be removed and this all entries are to be inserted. The provision done 6.25 is to be removed. This all entries are to be inserted. This effect also you're required to give it. Are you clear? Okay, the provision done by I Limited 6.25 million is wrong. That is to be removed and effect of above entries are to be incorporated. Effect of above entries are to be incorporated. Done. This is your RTP November 23 CA Final FR. We have covered each and every question. I repeat again, we have covered each and every question. This is not just an overview of RTP. This is a detailed discussion of RTP and you're able to understand which all questions are important, what all new things were added over here. So please make sure whatever questions I've highlighted is important. You're going home again doing it on your own. Again, I'm telling you which are the important questions. Those people who had joined late, they can just write it, which are important questions. Okay, question number 1 important, question 2 important. See, 1 is important, 2 important, 4 important. 1, 2, 4. Then 6. 1, 2, 4, 6, 7. 11, 12. 1, 2, 4, 6, 7, 11, 12. 15. 18. 19. 11, 12, 15, 18, 19. This many are important. So it's kind of half questions. So kind of 10 or 11 question out of 20 are marked as important. Please make sure you're doing it. And sir, please pump us. I know exams are nearer. What to do now? Very simple. Don't stop. I'm telling, don't stop. If you're not feeling well, don't stop. If you're feeling like a lot of pressure in your mind, don't stop. If you're not able to remember, don't stop. Keep moving. Keep moving. I understand the pressure is very high as of now. Don't do anything new. Whatever we have done in class, stick to that. Our material is really very good, covers everything. Plus, last 3 RTPs are to be done, suggested answers. Last 3 suggested answers you need to go through so that you understand the way you need to write in examination, and just keep moving. Don't stop. Give your 100% in this last 30 days. 15 days this, 15 days of examination. 32 days are just pending. Make sure they are the best days of yours. And I tell you one thing, you'll be glad that you kept moving. I repeat, you'll be glad that you kept going. In spite all the pressures, you keep going. You'll be glad later on about the same thing. So all the best for your examinations. Any doubts anybody is having, please tell me. And 11 o'clock, 10 ho gaya? 11 to 1, we have a RTP discussion for CA final auditing. I repeat, 11 to 1, we have a RTP discussion for CA final auditing. And one more thing, FR new syllabus lectures are available. You can purchase them from yashishacademy.com. I'll just write the name for you so that there's no confusion. FR new syllabus lectures, www.yeshacademy.com. My contract with Unacademy is over, and I tell you, lectures at Unacademy are as per old syllabus. I'll not recommend that. New questions have been added, new chapters also have been added, to go for the latest one. And we give physical material over here with all the orders. Any doubts? Anybody? Any doubts? Anybody? Chalo, thank you all for coming and attending the session. See you again at 11 o'clock for RTP session of auditing. Bye-bye. Take care. Study well.